Welcome to my YouTube channel Money Life Invest, and today I'm going to talk to you about what is an investment portfolio. I've been in talking about investments in general, so I thought of making a series of videos that explains the basics of investment. So with that, I want to first focus on what is an investment portfolio basically, because um, most of you, when you get started with investing, if you go and talk to any financial advisor, the first thing that they would say is portfolio. You might have heard this terminology, portfolio, etc., right? So but you may or may not be familiar. So it is important that you understand what is investment portfolio is. So I and if you want to have a good understanding, so you need to have a really a good feel of what makes a portfolio, what are asset allocations, and correlation between assets. So these are very key in terms of constructing a portfolio. So this is the first of many videos I'm going to make on portfolio theory in general. So with that, let's get started. So what is a portfolio, right? Investment portfolio, right? So think about, let's say you want to invest in various assets, right? So if you think about portfolio, what the term portfolio, it's a Latin word. Basically, what it means is it's a collection of something. In investment field, it's a collection. It's nothing but a collection of assets that will give you that one builds to maximize his or her return, right? As simple as that. So it's a collection of assets to maximize your return based on your risk profile. As simple as that. So what what are the various investment various assets that you can have as part of your investment portfolio? You can either invest in stocks, right? You can invest in bonds. Bonds is basically nothing but somebody issues basically a debt instrument issued by the borrower to the buyer with a fixed interest rate, guaranteed, and then upon the coupon expired, they will pay them the money, right? Or you can invest in a real estate. You know, you can invest in commercial or normal residential, or like you can buy lands, or you can invest in commodity, right? Like gold, silver, corn, oil, or you can invest in crypto, or in a high interest savings account or certificate of deposit. So basically you can pick some of these assets and make a portfolio out of it. It all depends on risk profile, right? So that gets to the question, what is an asset allocation should be, right? So think about, now understand what is portfolio. Portfolio is nothing but collection of assets. So what is asset allocation? So asset allocation is basically how you go about invest in various asset, right? And then that will basically lead to construction of your portfolio, right? So so these are the three main thing that one should consider when thinking about an asset allocations, right? What are they? Diversified assets. So basically think about it. Let's say like you want to. you have $100, right? And you don't want to invest all the $100 in stocks, right? So basically, you will invest in those instance maybe 50% in stock if you're young. So basically, you want to maximize your return. So you want to invest like 60% in stock, like 10% in bond, um, 10% in real estate market, REITs, and then another 20% in 10% in crypto, and another 10% in commodities such as like gold or whatever, right? You can do that. So that's basically diversification of assets. So when you think about asset allocation, you always think about diversification. The reason for diversification is to minimize the risk of your portfolio. You don't want to invest all your hard-earned money in stocks or in commodities, because if something happens to the stock market, if it collapses, you will lose. The risk of losing money is huge. By diversifying, even for example, if you invested some portion in stock and some portion in gold, for example, if stock market goes down, gold, hopefully, most of the time they are not correlated, so therefore your money that you invested in gold, sometimes it may rise because a lot of people run from stocks. Because if the stock market collapses, most of the people run to safe asset. In those instances, they tend to go and invest in gold. Therefore, your money, your return increases. So basically, it may sometimes offset your stock, but again, depends on what is the percentage you have invested. So there are a lot of factors goes in when it comes to the overall return. But diversification, now you understand diversification. So when it comes to asset allocation, you want to diversify your asset. Secondly, you want to uh, you want to invest in asset that are uncorrelated, basically that has low or negative correlation. We will get into that shortly. And then finally, you want to maximize, basically anyone's investment portfolio's aim is to maximize the return, right? But it typically depends on your risk profile, right? For example, let's say I'm a young person who just got started earning, right? So my risk profile might be very different when compared to somebody who's like about to retire in next 5 7 years. So it really depends. And I'm like, if I'm the young person, I'm willing to lose some of my money, right? But whereas, like, if you think about somebody who's going to retire in next 5 years, maybe not. So it really depends on who it is, and their risk profile, right? So these are the three main characteristics when it comes to asset allocation. You want to be diversified. You want to invest in assets that are uncorrelated with low or negative correlation, and then finally, you want to build a profile. Like, this is intuitive enough. You want to build a portfolio where the main aim is to maximize returns, right? And with your risk profile is taken into consideration. So now we want to understand what are uncorrelated results. So when you we talked about portfolio, what is portfolio, what is asset allocation means, and now we want to talk about uncorrelated results. This may not be very intuitive. So think about uncorrelated asset is one that th- there are, let's say, like, there are two assets that you want to invest, and both have either a low or a negative correlation. That means sometimes they are not related to each other. For example, one typical example is stock market versus real estate, right? So they don't have any correlation. They have very low or like negative correlation, I would say. right? Think about like if your stock market versus commodities. They typically have low or negative correlation. So let's say like you want to invest in some portion in stock and some portion in gold per se. So what happens? Let's say if stock market crashes, people tend to when that happens in that scenario, most of the people tend to go and find safe havens and then go and invest their money there. So at that point, they go and tend to go and invest in commodities and typically gold. So that the gold value goes up. So the reason why we are talking about uncorrelated asset is you want to when you build your when it comes to asset allocation, you want to invest in asset that has not correlated. That way you can minimize your risk of losing your money. So that's the main key takeaway from uncorrelated assets, right? So you can, I'm not saying you should be investing in gold when you're investing in stock. You can even diversify further by you can put some money in gold, some money in real estate, some money in stock. This way, like they are not correlated, and then therefore, like if there is something happens, your risk is minimized. Um, So that's pretty much in terms of like what is portfolio. So just to summarize, what is portfolio? Basically, a collection of assets, and then I talked about asset allocation, which is the main ingredient when it comes to constructing your portfolio. So as I said, I'm going to make another video, and then uncorrelated assets. So when you're allocating your assets, you want to allocate to the asset that are uncorrelated with lower negative correlations. So thanks a lot for watching my video. If you like my video, please hit that like button and subscribe to my channel. By subscribing and hitting that like button, my video will reach to many of the audience who maybe want to learn about all of this. So really appreciate it. Thanks a lot, and hope to see you in the next video. Thanks a lot for watching. Happy investing.